name's Charlie. I run the trading and dealing desk at Verto FX. Verto is a cross-border B2B payments platform. We're present in 49 different countries, but we have a very specific focus, largely in African corridors. So Nigeria, Kenya, Tanzania, that's kind of our remit. Now, I'm very aware, obviously, at today's summit, we're going to have quite a few people who are completely up to speed with how fintechs work, how they came about. Many of you probably work for a fintech or invested in fintech. But we're just going to do a quick whistle-stop tour of sort of how we got here when it comes to the fintech industry. And then as we move towards sort of FX and payments a bit more, discuss the challenges the businesses have on a day-to-day when trying to repatriate funds or whatever it may be, do payments, because there's a lot of focus that fintechs have on their own product and other areas, but sometimes it's easy to forget what is the need of the actual business. So when we think about fintechs, so prior to the fintech industry really booming, clearly we had our traditional bank systems. You had a bricks and mortar bank down the road where you would collect your funds, you'd make payments from. In the FX world, you might get them to do the foreign exchange for you, you might look to get a loan, you might look to do some advanced credit to somebody. And this was the setup. If it was 4 p.m. on a Friday, there's no way you're going to be paying anybody any money because obviously you're done for the weekend and there's a business that can be incredibly frustrating. Now, in recent years, obviously the fintech industry has boomed, but why has it boomed? What's been the selling point for fintechs? We've got that 24/7 access to our money. Ultimately, in my mind, that's the big deal. It's not a case of you got to wait for the bank to open or make sure the bank hasn't shut yet. You can go online, you can go on an app, you can get access to your funds, you can move it wherever you want. It's low touch, you don't need to speak to anyone on the phone. That's where it all comes from. It's the speed, it's the access. That, in my mind, has always been the lifeblood of this industry. It doesn't matter if you're involved in crypto, or if you're involved in hard currency, involved in Africa, Asia, it doesn't matter. That whole infrastructure, that's the selling point. It's the speed and access. As we go over towards FX, like I said, with a lot of banks, you'd have to make a manual instruction. You'd have to ask somebody at the bank, please convert my rate, my currency from one to another. They would give you a rate that may be plucked out of the air, well, as it seems to you as the client. It would take a long time to get settled. You'd have to have bits of paper passed between people at the bank, maybe some favors given in order to get that money moving. And it's incredibly frustrating as a business. But when we look at examples like Revolut and G10 or even Verto in places like Africa, we've really leveraged this idea of speed of settlement when it comes to doing foreign exchange. Now, the explosion in mobile technology within Africa has been massive. I mean, when we look at places like Nigeria, very reliant on BDCs to source dollars when trying to exchange from Naira. If you look at Kenya, similarly, you'd have to go to the bank to source your dollars. Mobile technology has moved the game on quite a lot for fintechs. And it's something which, if you have like a super slick, optimized like UX, user interface, a really strong product, suddenly it becomes a much more viable option than having to go to your bank or perhaps a local BDC. So as I mentioned, what are the challenges with a bank? What are the challenges for businesses today when they're trying to move money, when they're trying to do exchanges? A lot of fintechs, as I mentioned, focus a lot on products. I've spoken to a lot of people today who work at fintechs who have entire development teams based in Eastern Europe or in Asia. We at Verto, we have a massive dev team in India who do all of our constant product development, optimizing the product, making sure we're giving the right service to our client, the speed and the platform, etc. And there's a lot of investment goes into compliance as well, because especially in Africa, you want to make sure that where the funds are being sourced, where they're going to, making sure that it's all completely compliant, there's no money laundering or any liability involved in any party or for the fintech yourself. And that tends to be the crux. It's how good is my product, how good is our compliance. But on a day-to-day basis, when I'm trading FX, because we have a platform which is a self-serve platform, but I still speak to a lot of our multinational clients a lot. Some of them want the best FX rate, of course. They want to get a good price. And I speak to a lot of CFOs. They fancy themselves as a bit of a trader, a bit of a gambler, and they want to make sure they get a good price. But ultimately, a lot of these people I speak to today, they just want their dollars. They want to sell their local currency that they have in Kenya, they have in Tanzania. in Nigeria, this money that they've accumulated through conducting business, and they just want to source their dollars and get dollars into their bank account. It's a liquidity thing. A lot of the time, it seems like fintechs are so focused on making sure that the product has a lovely wireframe, it's been developed, it's been troubleshooted, all the bugs have been ironed out, but we forget what is the core need of our clients. And fintechs have gone from strength to strength now. Like, we're respected as much as we are banks. And these clients, they want that solution. They want that concrete liquidity solution that can be supplied to them 24/7 and instantly. Now, when it comes to actually owning a business, I actually started my own business about 5 years ago. It was an indoor cycling studio, which I know is probably kind of hard to believe, but genuinely that happened. And I remember there was so much I had to worry about. Now, I wasn't doing international payments. I wasn't making big payments cross borders. I wasn't having to pay big suppliers on a regular basis in the UK. But I know for a fact there were so many things that I had to think about as the founder, as the owner of this company. The last thing I want to worry about is my money going where it needs to? Am I getting the right exchange rate? Fintechs are there to almost be invisible. You just want that certainty as a business owner that you don't have to worry about your money being moved across borders. In the old system of having to submit manual instructions where it could take 3 days to get your money, or you didn't know what the exchange rate was going to be, it just became a constant headache. And I speak to people all the time on the phone who are business owners in a similar position as I used to be, and they're saying to me, like, I need my money because I need to release a shipping container. It's very easy to forget that as a fintech. Like, we try and make nice colors and make the product lovely, but you forget there is a real world business going here where they need the money to move their products or conduct their services. It's something which they shouldn't have to worry about, and that needs to be the focus for a lot of fintechs going forward. Now, obviously, in my world, I'm looking at FX volatility a lot. Now, clearly in developed markets, we do get a bit of volatility. If like the ECB cuts 25 basis points like they did earlier this week, then you do start to see a bit of volatility across G10 markets. But clearly, it's nothing compared to somewhere like Africa. If you look at Nigeria at the moment, you're talking maybe 5% swings in the day. You look at Egypt, just devalued their currency, and when was that, a couple of months ago? It's incredibly hard to predict. And again, as a business owner, how do you mitigate? How do you ease this FX risk? How do you hedge for the future? Like, obviously, in commodities world, if you grow corn or something, you can buy corn futures for 6 months down the line. So you're hedging your yield on your corn crop that year. In FX, especially in Africa, it's incredibly difficult. How do you mitigate the risk of Tanzanian shilling moving 10% in 3 months' time? Like, how are you meant to do that business forecast? Now, there are some products out there. Clearly, we have non-deliverable forwards. So for those of you that don't know, if you work in an institution, a lot of pension funds or hedge funds will use these products to speculate on an economy. It's a contract for difference. I mean, like to say like a bet basically on the currency. And if the currency moves in your favor, you get money back. If it goes against you, you have to pay out money. And it's all settled in dollars. There's no physical move of local currency. So in theory, it's a fantastic hedge for businesses. The problem is that the NDF market is only accessible if you are an institution, if you are a hedge fund, if you are a pension fund. If you're an FMCG company based in Kenya, there's no way you're able to get your hands on NDF futures or something. There is a market in somewhere like Nigeria, but the issue is the spreads are massive. If you're looking 3 months down the line, you'll be paying a huge premium based on where the foreign exchange is right now. And if you need to sell that NDF in the future, you're going to lose a lot of money. And again, it almost becomes a stage as a business owner, like, why would you spend so much on the premium to enter that NDF market? You may as well just take the currency risk on the chin, which is really not a viable solution for a lot of these businesses who are trying to make a return over time. The other issue with NDFs is that there isn't a deliverable element to it. So if you do need additional local currency funds in the future, you're obviously not going to be able to source them because NDFs are only settled in dollars. So it's not a perfect product. If you take something like Nigeria, again, the NDF fix, which is the reference point for that product, it doesn't quite follow where the parallel market is. We had an occasion recently where NDFs expired, so a lot of currencies have been hedged, But when the fix was set for that NDF 2 days later, it was dropped like 200 points. So as a business trying to manage your risk and the FX risk going forward, it's just not a viable product anymore. It's become a very, very difficult market to navigate. So how can fintech step in? This is sort of what I'm trying to get to. I've wobbled on a lot about what institutionals do. But if you're a business and you've got access to a fintech platform, how can that help you manage that risk going forward? Now, there aren't many, well, in fact, there aren't really any fintechs that can offer a deliverable forward. It's very difficult to model these products, and unless you have another business on the other side who's willing to take the same risk, then you can offset it. But there's not really a market for these deliverables. So the only way around it, and this is what I talk a lot about with our clients at the moment, if you want to mitigate that risk going forward and FX moving, you need a platform that can serve you quickly. It's no good having an order given to a fintech and it takes 3 days to deliver and the FX moves during that time, because you're not hedging anything at that point. You need to find a network or maybe just one fintech provider who can offer you this quick settlement so that you can be super agile. You've accumulated profits. Let's flip them into dollars now. Let's speak to someone. Let's self-serve. Let's go onto a platform. Let's hedge our currency risk like instantly, because devaluations are happening more and more. Nigeria, for example, used to have a fixed exchange rate. They now have a floating one. And similar story in Egypt. You cannot rely on these pegged currencies staying where they are. Again, Nigeria's been a great example where we had these big multinational companies, their balance sheets of Naira just sat there locally, and they were marking it off the official exchange rate, which was miles away from where Naira was actually trading on the ground. It was like Naira on the ground was trading at a completely different level. When the devaluation came in, panic set in, because suddenly these Naira assets on people's balance sheets locally were suddenly worth 50% of what they were yesterday. It's something which you need to be agile, and this is where the fintech industry has really stepped up to sort of come in and say, actually, you can take some of this risk and you can take it off your books. It's something that you no longer need to worry about. So I guess the only other areas that I often get asked about within the fintech industry is crypto. Now, crypto is or cryptocurrencies, so you talk about USDC, USDT. It's something which we don't get involved in too much of Verto. I think there's been quite a lot of talks this week about it, so I'll probably leave that to some of the other speakers this week to sort of delve into. AI is probably the only other area. Now, AI is quite interesting for me from a compliance perspective in terms of the fintech being able to onboard clients quickly. It seems to be an area of optimization which has really helped a lot of fintechs grow quickly. Oh, here we go, we got my presentation. Not that there's much in there, don't worry, you're not missing too much. But yeah, with artificial intelligence now, will it move into sort of my world in FX trading? I'd like to think no. I mean, there's still quite a big cohort in Africa specifically who they can self-serve on a fintech platform. Oh, here we go, there's more information. They can self-serve on the fintech platform. They want to source some local currency. They want to source some dollars. They can get a rate instantly, 24/7, trade it. But there's a lot of businesses now who still want to pick up the phone. It's almost like a cultural element that a lot of local people in Africa, they want to be able to like, have a haggle, get a bit of information about what's going on in the market. They like that high-touch approach. So if AI was to sort of come in and take over that sort of FX and payments challenges, it's going to be very difficult to satisfy a lot of these businesses, especially the big multinationals, like I said, the CFOs who... Oh, I do? Yeah. Look at that. Sorry. We'll go through this in a minute. They want that high-touch approach. They still want to speak to someone. So we might start to see AI filter into fintechs within the compliance space. For me, whether it will come into FX trading, whether it will come into actual physical payments, I'm going to leave it as a perhaps, but I think it will take some time. I think there's other areas of optimization for a lot of fintechs. I guess finally, just to go quickly through Verto, like I said, we've got 190 payout countries, 20 exotic currencies. I mean, it's about 49 currencies all told, because obviously we do G10 as well. And yeah, there's not really a lot else to show on the presentation, but we've got representatives here this week from our account management team, from our sales team. If you want to get in touch at all, please do let me know. But otherwise, yeah, thank you very much for listening. I very much appreciate it. If you've got any questions, please do let me know.